Hello traders, what's up? Welcome back to my YouTube channel. As you can see, I'm going to be going over ICT's complete 2022 mentorship. I did this video to summarize everything in that mentorship. So what you're going to be seeing in this video are the core bullet points that makes up the whole 2022 mentorship. Welcome once again to my channel. I'm going to make everything super clear and easy, and again very brief. So let's get right into it. Right, welcome back guys. Okay, so let's go straight into the video. So what you see on the screen are the four core things that ICT spoke about. These are the pillars that hold the ICT's 2022 mentorship: daily and weekly bias, hourly analysis, London and New York kill zones, 3 minutes or 5 minute entries. These are the major things you need to know. Okay, so I'll go over each of them one by one. Okay, so let's go. The first one, daily and weekly bias. So when we talk about the weekly and daily bias, this is how I try to define it to be very easy for us. Okay, the idea of using the weekly and daily time frames to look for high probability setups in a direction towards the next liquidity draw. So I'm going to explain this better on the charts. Okay, so let's look at the GBP USD charts. So this is the algorithm of the markets. Okay, the algorithm of the markets is in such a way. The algorithm of the market is in such a way that prices move from one liquidity point to the other, right? Price moves from one liquidity draw to the other. We have a lot of areas where retail traders have their stop loss rest. And as long as the market is fractal, these things, even if you think they happen only on the smaller time frames, they also happen on the bigger time frames. Example, as you can see, this is a weekly time frame, and you can see where sell side liquidity was taken around here. Sell side liquidity was taken, okay, beautifully around here. You can see that, and that was taken, and that's, now you see price is trying to go up. Where is price heading for? The next liquidity draw. So when you're trying to do your weekly and daily analysis, you're trying to see the potential direction price can go in the long run for that week. So look at this candle. Okay, look at this candle. What does that show? What does that show you? That shows you that in this week we are going to be bullish, and also it shows that we can also be bearish. Remember, we do not ICT never taught us to try to predict where the market is going to go. You have always been taught to see this whole thing in perspective of probability. Okay, so we can look at it from a point of view where this is a fair value gap. Okay, we might just crash back down to this next liquidity draw, or we might crash down to this other block right here before going up. So the whole essence of the weekly and daily time frame is to know the next area price is going. So since we have this week right at this level, it's better to anticipate sales, because we see liquidity resting here, we have another block resting here. Maybe we might see some kind of rejection for this week, which is going to be bearish for the week. So knowing where you are right in the week, what the weekly candle is doing, is going to help you, anticipate what you might see for the entire week. Coming to the daily time frame, you see things clearer. You see that buy side liquidity has been taken. You see that this buy side liquidity has been taken also, and this is just like a relatively equal high. You remember when ICT talked about relatively equal highs in this video? Price has to clear them and then pull back a little, because whenever liquidity is taken, price falls back. So it's still looking bearish for this particular day we are in, which is Thursday. Okay, so the weekly and daily time frame is all about showing you direction for the next liquidity draw. Where is price likely to go? Where is it more likely to face? So when you do that, you establish a daily bias. Okay, you establish a daily bias. And when you establish a daily bias, you have a better guide for the entire, for that day on what to trade. Remember, this is not mechanical. Looking at your weekly and daily bias is more discretionary, because you have to understand how the market works, know what order blocks mean, know what liquidity mean, what fair value gaps mean. We have a fair value gap resting here before an order block. So it's more like a reason why I'm saying price will eventually pull back and sell a little to this whatever. But again, the market can do anything it wants to do. It could just keep going up to aim. So when we see price breaking this region, we know that okay, the next point you're going is around this area, 1.22965 area. See, so that's what this is. Daily bias and weekly bias is all about trading towards the next liquidity draw, or trading towards next fair value gap, or trading towards next order block. Okay, so let's look at the next bullet points. So looking at the hourly time frame analysis, this is how I define it. The 1 hour time frame is used to clearly see the recent price action and old averages from previous days that have the potential to magnetize price. Nice. So let's look at the 1 hour time frame on GBP USD. 1 hour time frame. What do you do? What does the 1 hour time frame help you to do? The 1 hour time frame help you to look at liquidity draws, in the market. Remember, the whole gameplay of trading is liquidity. That's what moves the market. Okay, so as you can see, we have relatively equal lows right here resting. There are lots of stop losses at this level. Okay, and the price will get magnetized to it. We have buy side liquidity resting here too. Okay, and we also have Tuesday's high resting here. All these are liquidity points. Okay, so the 1 hour time frame helps you to look at the market very clearly and know where price is likely to go and where price is likely to clear. It gives you a clearer insight on what price is doing. We also have relatively equal lows right here resting here. Okay, so basically the 1 hour time frame gives you lots of insights on what price is going to do. And also, when you find fair value gaps like this in the hourly time frame, like this one, as you can see, it was an old fair value gap. Look at how fast it was mitigated, and price just jumped after that. If there was any other, like you can see, there's this other block right here, some other point of interest in the markets. You know what I mean by point of interest? Fair value gap, other blocks, all these are points of interest in the market. If there was another fair value gap that was not filled, that was lying helpless, right here, you can equally, you can say that, okay, because of this fair value gap, if you are selling at that fair value gap, you want to exit your sell position, because there could be a potential reversal, because you see price is making higher highs and higher lows. So price could clear this sell side liquidity, tap into an old fair value gap around here, and then fly to catch these highs. So what's the gameplay about? If price does not clear this, but clears this first, you should look for a way to get involved with buys from maybe an old FVG or something line open right there. If there is nothing, you could look for a market structure shift. What I mean by market structure shift, if there is nothing like a fair value gap or anything lying here, you could look for stuff like this, clear this SSL, look for a market structure shift like this, look for buys aiming towards this area, right? By doing this, you have successfully been able to take out the sell liquidity, catch the move that will take out this buy and this buy side liquidity. That's how the market works, basically. You get. So let's see the next bullet point. London and New York Q zones. So this is how I define it. Executing during a specified time of high volatility called Q zone after a liquidity grab, usually trading in the opposite direction in line with your trading daily bias. Very, very clear. These Q zones, London and New York Q zone are specific timing where you have to, where there is serious volatility in the market based on news drivers, based on whatever, right? But that's why ICT told us to set our time to UTC -4. When he was teaching, right now it's UTC -5 New York time. Get. So set your timing to UTC -5, and when you set that time for you guys trading pairs like GBP USD, currency, Euro USD, whatever, as long as it's currency pair, your execution time based on New York session should be around 7 o'clock Eastern time. That should be your execution time. So around that time, this is where there is some manipulation after a little accumulation to see that that distribution, that expansion in the market. So you want to be involved with that, but you should make sure that aligns with your original daily bias. If that day you're bearish based on your daily time frame analysis to the nearest liquidity door on your daily time frame, then you should look for a liquidity grab on the 15 minutes, okay, during your Q zone. What I mean by Q zone, that specified time. All right, look for a liquidity grab during your Q zone and trade in the direction of that daily bias. So let's see what I was trying to say. So here we go. GBP USD 15 minutes time frame. We have to mark our midnight, our New York midnight time, because my session breaks is a little bit different. Okay, so this vertical line right here is going to be my New York time, midnight, right? So during the Q zone we want to work with is around 7 o'clock Eastern time. That's where we want to start trading from. As you can see, between this box to this box, remember, once it's 4 o'clock, once it's lunchtime, which is 11, I'm done for the day. You get? So looking for setups between this and this, right? Between now, so I'm going to use a better tool to mark that, so you don't get confused. Remember, okay, so you have to look for an execution between this time to this time. So how can you deal with stuff like this? Dealing with stuff like this, you have to identify. Let's say, yes, I was bearish this is Wednesday, right? On the daily time frame, I was bearish because I told you we are at I'll go back there again, right? So you can see clearly on the daily time frame, I was all for bears because, like I said, there is a fair value gap line here, and also there's an order block. And this fair value gap is a weekly fair value gap we are right here tapped in, right? This big box. We're coming from the weekly time frame. This one here is a daily fair value gap. There's also an order block here and some relatively equal lows and all that shit. And even this is a very huge sell side liquidity. Okay, so this is something we are more for bears than bulls, right? On this day. Okay, you will never be correct every single day. You will be correct some days, you'll be wrong some days. All right, so it's normal. Don't think you will always be right with your analysis. Okay, I should be that clear to us. So what we have to do now on these 15 minutes is to mark out your buy side and sell side liquidity on the charts. Okay, so as you can see, these were all relatively equal highs. See, as buy side liquidity, they were taken out. And guess what? So I will not get confused. I'm removing this. That's 1 hour perspective. I'm removing that. So this was taken out. What's next? The next liquidity drop. That's how it happened. Took this out. Next liquidity drop. During our Qs, and what did price do? Price, tapped into an FVG. Tapped into an FVG around here. Okay. And this FVG, as price tapped into it, it gave a 3 minutes break of structure, or you call it market structure shift, and that's how it sold. You sell your way down here and get what you want. So let's see the last entry criteria. So the last 3 minutes and 5 minutes entry. Okay, so last step is to enter on confirmation after price clears buy side liquidity or sell side liquidity. Confirmation includes market structure shift and FVG mitigation. So this is how it works. Let's go straight to the charts, still on GBP. All right, so this is where we're talking about. So when it hit that area, where was the market structure shift? Here. And remember, this is what happened on Wednesday, GBP. Okay, so that's the market structure shift. Where is the FVG for entry? This large area here. What did price do? Price tapped into the FVG, and you see the sell off. Boom, so down. I was expecting it to clear more of this sell side liquidity, but it didn't. Cannot force the market to do. Just let it do its thing. So if you're actually confused and you have questions to ask about what I just explained, I tried to make this video as short as possible, try to summarize the whole brain behind the whole 2022 mentorship. It's as easy as this. Okay, so you can try every single day, every day, and see what you have, right? See what you see what the whole mentorship is all about. Practice. If you have questions, you can ask on the comment section, and also click on the link in the description. You get my WhatsApp number right there, and some other details where you can contact me. Okay, you can still ask personal questions, and then I'll answer you any question at all. All right, so peace out, guys. So I'm going to recap. Okay, your daily time frame and your weekly and daily time frame, you trade towards liquidity draw, meaning your bias for the week is based on the next liquidity draw, or if there is an FVG or there is an order block, right? Your your what do you call this? Your hourly analysis is to see all the buy side and sell side liquidity that price can get to in the long run, and also to look at old FVGs that could be mitigated for movement in the opposite direction. Then you come to the 15 minutes time frame where you focus on your kill zone and look for, liquidity grab and trade in the opposite direction, making sure that it aligns with your daily bias. Your entry criteria, you do it on the 3 minutes time frame where you look for market structure shifts, trade into a fair value gap, and then boom. All right. So don't forget to like and subscribe to this channel, okay, for more videos on the ICT 2022 mentorship. I'll be dropping more videos on ICT 2022 mentorship. Follow up, ask your questions in the comment section. Peace out, guys.